Business loans without interest rates up to 2 million and above, and no business credit needed. None of that established. And even if you do, you could potentially still qualify for this, and it may be your best and only option, as well as creative credit-based financing, including 0% interest for 6 to 18 months and up to 150,000, if not more, in the form of business credit cards, which is great. It's one of the most lucrative programs out there. And you want to do this correctly without making mistakes, making sure you go to the right source and sources, the experts, myself and my team, as well as much more. I'll also get into a document here in a little bit detailing this without interest rates as well as other options. So please hang in there with me. We won't take up a lot of time. I'm hoping that we can close out here under 20, if not 15 minutes. Before I get started, my name is Michael with Viral Funding Solutions. Just in case this is your first time or you do need a reminder, I know we all do from time to time. I'm a business funding expert, or in other words, a business loan broker expert who's been able to help a lot of people. Gratefully, very humble, appreciative. I'm very introverted. I'm a Libra, if that says enough. And I'm very loyal. And so I care about helping you as a person, as a human first, and then in your business. I'm very cerebral. The way I think, I'm a very math and system driven person. I went to school, I educated myself. I got eventually into chemical engineering classes, did that for a little bit. Then I moved into business administration because I wanted to start a business and do other things. Chemistry being my favorite class. I worked in construction, manufacturing, and in the field, running the machine for an aerospace company, not like in the cubicle space. I moved into the blueprint room and I started doing things as I moved up. And then later on got into a financial logistics position. I couldn't move up another role. Company went down under for a huge contracting company servicing HP and Peace Health and a variety of others. And I couldn't get paid more. The person in front of me didn't want to retire. Company went down under, relieved 50 plus people, one of my positions, and I had to go back on unemployment, food stamps. And I'm not sure if you've been there or similar, but being at that low point, going even to a grocery store, not even making eye-to-eye contact with the guy or girl at the register. And at times I would, but as an introvert, think about that. And I'm an older brother, I have a younger brother, but not to go on and on. From there on out, I started building out my business. I got into the digital marketing agency, lead generation, affiliate marketing in the health space, in other verticals, other ventures. And this is my primary focus as a business funding expert. I know what is best out there, what isn't, the best lenders and underwriters that I've vetted, myself and my team. And there's a lot of this information that isn't publicly released that you can just find on other YouTube videos, blog posts, social media, and so forth. So I'm here to make sure you get the best. And I always go about these three, and I'll go into the document: credit, cash flow, collateral. You either have one of these three, two of these three, or all three. And I look at maximizing your potential around one and even multiple now and in the future. We can even get creative. The banks don't approve for startups, even non-startup, their debt ceiling. They're trying to raise that up. Now, right now, it's really hard to get approved. Even with higher cash flowing, profitable businesses, you're still seeing trouble. And so an alternative to this is going through private investors, or in other words, private lenders. You can disassociate the two. They can in some ways be congruent and continuous. So I'm going to be getting into this document, and I'm going to go into another screen here in a second. But without any interest rates, just keep in mind that we're talking about factor rates. And that might be a term you are not familiar with, or you're like, I've received those advances / term loans. I know what they're about. They work for me. Or this person goes, they didn't work for me. So keep an open mind about this. A lot of people, they have a shutdown mentality. And it may be because you're frustrated, you're stressed out, you're trying to figure out what's best. There's a lot of options. You're being bombarded from anywhere and everywhere, and you're just applying anywhere and everywhere with like your eyes closed. Literally, you have your eyes closed and you're throwing the dart at the board and hoping that you'll hit the bullseye, or at least somewhere around the board. And that's not a good strategy. So with myself, I'll be able to help you like I've helped out many. Free document down below in the description, I'll try to leave, as well as a questionnaire. That's where you want to begin. If you haven't, that's the place to get started. Processes, systems, and automation. As a business owner, you should have these. And if you don't, you're doing yourself a huge disservice, whether you're a one-man team or not. So factor rates. this is basically a simple way of saying that, let's say we got you 100,000 in funding, and I'll transfer over to screens in a little bit, but we're not amortizing like a traditional business loan on that remittance schedule. A lot of these are already less than 12 months, so you can't really amortize it. But now there's a hybrid where it's between 3 to 24 months. You probably heard of the merchant cash advances. Now there are hybrid cash advances where it's all revenue coming into the business. Everything that we look at on top of credit card statements if we had to, but we just look at the credits. We don't have to collect those individually from other bank statements. So this can be a lot less reduced in friction as well as flexibility it allows you to, and it could be least expensive because you also have more revenue coming in, and it could be more flexible from those providers and those lenders on what they look for. But let's say 1.20, that means that if you got 100,000, you're paying back 120,000. Depending on the term, you might have been given 12 months, you might have been given 14 months or so. But for every dollar that we give you, you're paying back $1.20 back. And the 0.20 part of it can be an association of fees and a few other things that are involved. And so the lender has to recoup their money, one, but also make money and get their return on investment. You have to also understand the business side of this. And if you haven't been in business, or you have been in it, but you've been neglecting to this, or thinking that there's some kind of difference now because, well, I'm just trying to seek cheaper financing, I should be getting it at zero origination fees, and I should be getting it. No, see, you're not entitled. You're not deserving as much as you may think. And that's not me being aggressive or negative. That's just me giving you some tough love, isn't it? Now, if you look at that the wrong way, then there's some questioning you got to do. And that happens a lot with business owners. It's very common. I can chop that up in certain ways and say 1.20, what that means, but I just gave you a general definition. I can go on and on about buy rates, sell rates, on all this stuff, but that's for another time. Just know that not to be complex about it all, but 100,000 paying back 120,000 on the 1.20, and there could be another amount associated with that. But what's your term? What are you doing? You get something to pay back at a 1.20 in 2 years. That's about 10% per year. Not really exactly, but you can change it over into an interest rate as much as you want. You can turn it into an APR as much as you want, but it still won't be exactly the way it has to be, as opposed to it being a factor rate. So you could do this. I've done a lot of math, and you can try to justify it that way and say that's 20%, 1.35, that's 35%, or my APR is this. I've done all that, been there, done that. I've received funding myself. And that's another thing you get from myself. It's somebody who's an expert, who's actually done this, who has funded their businesses, who's in the thick of things every single day. I know how to improve cash flow. I know if there's a problem with my cash flow, what do I need to reduce? What do I need to increase? Do I need to do a combination of the two, one or the other? What other factors play into this equation? Do I need to reduce my marketing and advertising spend? Maybe it's my email marketing spend. Maybe it's a cost of having extra websites or having this funnel builder together, or other things that are on my expenses and what I'm actually generating in revenue and sales and all these other things. What do I have to work on? And that's a video for another time. I won't focus on cash flow improvements too much here, or profitability, EBITDA, and a few of those, but that can be for another time. So let me transfer over screens. I gave you guys a pretty much a standard definition and work through on what a factor rate is. You can also consider that as total payback. So they say 1.20, you might think factor rate. You can also classify that as total payback. If you're getting 20,000, you got a 1.27 factor rate for every dollar that the lender gives you. The merchant is giving back $1.27 back. You can classify it that way, or there's many other ways to put it. So let me make sure that I have here. Okay, so let me scroll up. I might leave this document down below in the description. You might have already heard of this, but it's good to get repetition in and to understand these things. So there might be an application video. There might not be. As the time you're making this one, we're not going over that. That's for another time. But it'll be down here. You can learn more about the revenue-based financing without interest rates, and you don't need business credit established. But, and I didn't say this in the beginning, I want to address this now, get business credit established. This is another like 3-day session that I can have. But what business credit allows you to do, if we're just looking at it from a financing perspective, and then I'll break it down below that, it enables you to get approved for these SBA loans. Maximum approvals, one, But then two, you increase your odds in that business credit application of getting approved. Even if you just meet the minimum of what they're looking for, a lot of this on FICO, SPSS, business liquid credit scores. So for those of you who don't have business credit, it's time to get started. And I'll leave my free business credit building video series down below. Yes, it is free. There's not a catch. I'll show you step-by-step videos and then the system that I've been able to use. But this is what I would do. That quickly, I would jump on top of it. There are certain people out there who do need more like handheld. I get that. Times it doesn't make sense to do that, depending on how I am energy and time effective in all of this. And then others are just like, I know the people I don't have to tell twice to. I know the type of people who just have to hear it once, or they might need a little bit more, and it's okay. But those are the people that go like this. They're not wasting time. People come back to me later on after 6 to 8 months, establishing better business credit. Then they're increasing their odds, more accounts, more trade lines. Now that the FICO SPSS business liquid credit score is up in the lender's assessment, your risk is less. And so they're going to want to look at that better. Bank term loans, the same thing. You're looking at a new SBA Bolt loan right now up to $150,000 where they require a FICO SPSS business liquid credit of 175 plus. That's not asking for too much, but it is enough where they want to make sure that it's creditworthy, personal and in business. There are other SBA loans with the 155 plus FICO SPSS business liquid credit score. So it's very important that you have those foundations. In other ways, it enables you to separate yourself from your business and things you put underneath your incorporation, whatever you're established as, whatever entity. And it's very helpful for a lot of other reasons, especially qualifying for better business credit cards or qualifying for certain business credit cards. If you're using installment net 30 accounts and stuff like that, that can eventually turn into better approval business credit cards. Or the start of it, you're just not using the starter business credit cards or relying heavily on your personal side. And it looks more attractive, like your business can take on more. And you're just going to feel better overall as a person and health in your relationships. You're just going to establish more of that common ground and not being rejected every single time, thinking that there has to be a quote unquote quick fix. So for qualifications of the revenue-based funding without collateral, please read over this carefully and all else from this point forward, please. Application below. And I don't mean that to shout. Like a lot of you don't even look at these things. I have people who even till right now, who I'm trying to tell them, like, I'm not automating this one email that I just sent you back. Like, you're a part of my email list because I'm going to educate you and I need a way to follow up with you. That makes sense, right? If you've been in business long enough, whether you do email marketing or not, or you don't do it effectively, that's besides the point. You want somebody trusted in your corner that is going to give you the what do they call? I just lost the word. The towel. I was going to say, I don't know. I was thinking blanket. Guess I'm getting cold now. No, but the towel in your corner to wipe off the sweats, to bring you water. And so you can get back into the ring and start boxing again, start wrestling again, or whatever it is that event you're going after. And we're doing this as a marathon, not as a sprint. If we need a quick sprint to get to that marathon, then okay, but what do we need to do step by step? And so those responses via email, I'll go in there and then respond back. But now it's up to you to then decide what you do there. And if you don't want something as effective, okay, well, why is that? It's up to you now to decide. Is that going to be a conflict of attitude and effort? Will it be a conflict of ego, stubbornness, hard-headedness, cockiness? Or will it not be? See, I know the psychology of this very well. I've worked on myself hard, guys, as an entrepreneur business owner, very, very hard. I'll probably spend a little bit of time at the end of this video going over that. But you're operating for profit. This is what it would require. And I'm going to go into an example with those factor rates. But let me go into the qualifications. You're operating for profit. We've done some nonprofits, but it's very hard to, especially when we have to know where the money's coming from. So if it's like a third party and you're generating revenue in another way, we may be able to consider it articles of incorporation, organization. Are you listed within your Secretary of State? All of these other things come into view. And if it's verifiable or not, and then some other factors, it could get you disapproved. Do you have a business checking account? Must be in the name of your business, not a personal account that you use for business. If you're using a personal account for business, you can go to the self-employed option. So a lot of you are already struggling to get a business checking account. I've had somebody recently who worked on getting a business checking account, and they were making deposits into that primary account after they learn that a personal account, and I walk them through why they shouldn't have that and what are the repercussions of having that and what to do to go about getting a business checking account, which is very simple. I'm not going to get into all that right now, but you have your banks that you can establish that with, or your bank. And from there, you deposit, and we have to still see the amount of deposits. We have to see the type of deposits. We have to know if there are non-sufficient funds, insufficient funds, negative days, insufficient. You can say that as well. There are overdraws, bounce checks, or whatever is happening. We're looking at the credits, the debits, the money being deposited, the money being withdrawn. And there's a lot more, like starting ending balances, average daily, average monthly, biweekly, weekly. I can make those assessments myself as well. But there's a lot more. That's not just it. So these are all things that are factored into without these interest rates. So let me go back into this document. And again, I can spend a lot of time on that. I've done it in the past, but let's move forward. So there will be one down below if you're using a personal account. Business accounts are very important. Otherwise, you're going to get approved for a lot less. There are minimum requirements that might not require a credit check, but that's the thing. You're going to get a lot less. And if you're generating more revenue, like 5,000, 10,000, 15,000 and above, but you have a personal account you're operating under, well, the approvals are going to be about 20 to 25% of your lowest monthly revenue in the last 3 months. And that's going to have to be at least 3,000 minimum, not exceeding over 5,000 in funding. So, and not transferring funds from personal to business. I see a lot of commingling, you can call it. There are a lot of words you can use, but from personal to a business account, then a business I can see sometimes go back into a personal account. I can track all of these things myself and my lenders whenever we look through the bank statements, the underwriters too. I know what they want. I know how to pre-underwrite files, guys, for everything. Cash flow reasons, profitability, you name it. Personal, business tax returns, the balance sheets, the income statements, P&Ls, in other words. And there's so much more that I take the time to go through and do calculations on, and I can get back to you on if that information is necessary. But with this one, without interest rates, remember that this doesn't need to have a lot of documents. We can do it with 3 months of bank statements, a copy of your driver's license, and a voided check. I know we're going over time. 17 minutes in. I'm going to try to close up here soon. Guys, if we go over 20 minutes, please hang in there with me. I'm going to try to close as much as I can underneath 30 minutes. But if you're getting value from this, let me know. Give me a thumbs up. Let me know in the comment section. I know I have quite a few of you to get back to, as well as in the questionnaires and the emails that I'm still working on. I did quite a few today already. I have more to catch up to. Okay, guys? And it's okay if I get a reminder. Those of you who show up and go, hey, Michael, I'm just checking in. Oh, man, like they didn't have to tell me because I'm already going to work on it. But now that they told me, I'm going to move them up. Or I won't necessarily do that. But now they are more alert. And so I know if they're responsive. I know if you are open-minded. I know if you're going to allow for feedback and you're patient about it, you're hitting home runs already, even before we've even started. So I see the little things you guys don't really see, or you do. And as a business owner, you probably already see these. So I'm constantly observing as an introvert. Is your online bank, so up here, excuse me, and not transferring from personal to business, that's not a good look. That does not count as stated true revenue. We won't count that as the overall amount of revenue you're generating in the business. Online banking setup, we're in a new time now. I don't have to say much. I can go on and on about that. But PDF statements, the way you submit documents, the way we're able to verify eligibility, legitimacy, and that's another topic. But there's so much more. 450 plus credit we can look at, although 500 plus is best, if not 550 for lower revenue. I would say if you're in the 5,000 and above, less than 15,000, I would rather have 500, but better yet, 550. Now, if you generate higher revenue, let's say it's 15,000 and above, then we may be able to consider better 450 or 500 levels. Even 550 and above may be the requirement we look at. And even with less than 15,000, we can look at 450 plus, but it could be a lot harder because you already have ineligibility in credit, perhaps. You're over leveraged. The lender, myself, my team can't trust you with the money we give you. You're already asking for 60,000 when you're only generating 5,000 on your lowest month, on average 10,000, but you had a low month. How are we going to even justify getting you closer to that 10K? Maybe we get you 7,000 to begin with and you build that relationship. So what if I got 4 to 6 months? I know I can't get more. So how do I do that? You pay off at least 50% of the balance. You can look at another position in about 30 to 45 days, more or less. But that's not what I would do because you're already over leveraged. You're likely not going to get more and you're not going to go to the right source. That's another problem. Now, here's one thing I want to make mention of. I've had recently a lot of complaints from different providers, different lenders that are not mine, that I'm associated with. These are really coming from others that I'm not, and for a great reason. And those of you who do complain about a specific thing, it's not because of the lender's issue or mine or the team. It's because you're not in it. You're not educating yourself enough, or you have, but you just have this whole like, I need it. No, you're not gonna. I know what you need. Now, let's say you were to take some of this money. What would your cash flow look like in 4 to 6 months? What would it look like in the next week, in the next month, in the next 2 to 3 year plus? Is it suffice enough to take this and generate more cash flow with more in revenue per month, increase your profit margins? What would it do on a net operating income level, net profitability? What would it do with your EBITDA? What would it do with all these other things? Excuse me. And if it doesn't have an exact impact or immediate impact, then what do we need to do to start off with? Those are the things you need to take care of first. And if you have a project, this money is not by any means supposed to be inexpensive. I didn't say that. These are more medium to higher rates. And normally you see approvals between a 1.35 factor rate or total payback to a 1.49 and above. Now we see them between 1.19 more or less to about a 1.55 or 1.69 and sometimes more and above. It's just a calculated risk. It's already non-collateralized. You already have lower credit, or you don't have high enough revenue, or it could be time in business, industry, and more things, or you have everything that's in a paper and you have everything. You have that, but you don't have business credit established. You don't have maybe there's some things that we're more lenient on in this underwriting than you would have as opposed to going to another source. Or there's another thing in your industry you've taken on, you've been over leveraged. You don't have enough liquidity in your business to properly be able to give you new debt and take care and consolidate and refinance the existing debt. See, these are the things that I see all the time, and I'm always doing my numbers on the back end. So take that money, double, triple, quadruple it. It's a better use. If it isn't, just working capital, how can you justify making more money with what you take? It's going to be a little bit more difficult if you don't have an expansion project. Well, I don't have enough return on my investment because 20% of my funds are being allocated to this. Another 80% of this is going into hiring people for my current staff or payroll. Okay, well, that 20%, what would it do? Okay, for your business, you're going to generate an additional 10 to 20,000. How much are you paying back on that 10 to 20,000 you're generating? Okay, does it make sense? Does it exceed? Does 100,000 on 120,000? Are you making 140? Are you making 160, 180? Just even 130, 125, even breaking even. If you're going backwards, does it still make sense? You need to come backwards to then rebound and then move up. You need to take a temporary setback. A lot of people do that. I've done that plenty of times. Nothing to be ashamed about. Sometimes our cash flow isn't in a position at that time, but we have to take an immediate response. I know it won't help generate that cash flow. It's probably going to suck up a little bit, but over time it's going to increase and it's going to help. You're going to probably move into another type of tier of service, and I can help you with a lot of that. It's all about having a longer term and looking at all of this. How do we move up and how do we get up and doing better services? So we can still look at that. As I said, if you have lower revenue, it might be a credit and eligibility factor. You're probably over leveraged, but we can still consider it. Deposit, if it's just too much, your eligibility on the credit now, and then it becomes a depositing frequency and types of deposits, how it's being, like there's so much more we got to look at. 4+ months time in business. If you have 3+ months, go down below to the self-employed option, although it might be 6 months to some points. But 3+ months is a lot of the time what you'll see. Option below in green heading. If you're a startup, you can go to the green heading that reads personal business startup loan option. And this more or less I'll have for you guys in that questionnaire you guys submit. Like I said, again, I'm very good at evaluating and analyzing. And so I'll give you a proper email response back on your best funding option and options. It could be in a PDF. It could be in a longer email. Just depends on energy and time efficiency and the type of situation that I'm looking at. But I'm looking at one on my screen here. You guys can't tell because it's confidential for a client. But here I'm looking at their PDF that I sent them not too long ago. And this is a client that needed funding for working capital, for hiring employees, and a few other situations. And there were a couple of options because they had better credit. And then on all 3 consumer credit bureaus, the revenue is high enough. It's way above the 25,000 minimum mark on one of them in the last 3 months. And you can still qualify with less. But with that said, and they have business credit established, now it's a question of how much, what's on their credit. Because if it looks good and they have the right cash flow and they want to supply extra documentation, then we could potentially look at an online bank term loan. We can look at maybe an SBA 7A loan up to $350,000 with less of a credit requirement on a 660 level. Although it is quite difficult to get approved for something at a 660 level. A lot of the times they're going to want to see at least 675 and above. And so when you see 660 with SBA loans, a lot of the time 675, 680, it can change from time to time. But normally in a market like this, you're going to want to see around 675 and above. And if that isn't the option that works, then we have an online hybrid cash out advance service. And this is a derivative of the merchant cash out advance. I know it's not going to be the most attractive, but that's where a lot of people begin. And that's where you have to start, because you don't have the sufficient revenue. You don't have the sufficient, maybe the business credit. There's a lot more that causes an eligibility, declassing, decreasing revenue trends. It's not exactly going to disqualify you, but that can be decreasing in cash flow year to year. There are some stipulations. You have undisclosed debt. You have debt that needs to be cleared first. So you're going to need a credit partner. You're going to need a friend, a family member, or somebody to help you with that. You can do this much quicker in another case. So let me get back into this document. We're going to try to close up here soon. So those options will be down below for creative credit-based financing. Also have collateral and more. 3 months of revenue, at least 5K plus per month on your lowest month, 5K plus. If you do 3K plus on your lowest month in the last 3 months, and have 3+ months time in business, you can see the self-employed option below. That's in green heading, and I describe it in detail per detail. Again, guys, this is a lot of the stuff, and even in those questionnaires, I can even go into even more deeper on what you can't normally see publicly, and a lot of these things can change over time. So you want to be most up to date with this and with an expert who is very energy and time effective. If you're not here to waste your energy and time, think about that. You match mine. I'm a very structured, disciplined, punctual person. You don't have to be as much as I am, but all I'm asking for is responsiveness. I'm asking for accountability, responsibility, a character in good standing. And if not, it's okay. We leave all of these issues, all of these, well, ego and this, if I have that, out the door, because I don't want that affecting myself. I don't want that affecting my team. Nobody needs to be put through that. You shouldn't have to go through a bank and put somebody down the meat grinder, and having to spill all this stuff, not on an emotional or like, not as in like they're not trying to figure out your problems as in your business and other things, but you have this attitude and thing. I've heard a lot of stories and I've gone through a lot of things with people who have tried to do that, and I'm like, not with me. And so if you're looking for somebody who's going to really help you and who's really loyal and accountable, responsible in all of this, then I'll be there to help. So at least 3 to 4 deposits plus per month is best. The more the better. Some lenders will require 5+, others require 7+. Specific A-tier lenders will require more, not always, but they just want to make sure, because of your industry, they want to ensure that you meet a certain amount of deposits and a certain amount of revenue that you're generating in your business, because it wouldn't make it worth it for them to take a chance on you and to lend you their money, and for there then to be problems. And they've seen this pattern in the past. It's also with cash flow and more money coming out than what comes into your business. As we're looking at month-to-month bank statements, we may ask for a tax return, a recent one, a business one. If you have at least 150,000, you can get or above 150,000 that you're taking, sometimes up to 100,000 and above, or 100,000 and above, depending on if you already have other advances, or we really have to see the legitimacy of something. But sometimes that is asked for when you're exceeding a certain amount, but not in a lot of cases. Or when you're looking for less, But it depends on your tier, industry, and more, so it'll be different for each one of you. You're depositing your funds into one primary business checking account and not transferring with multiple accounts over and over again, which it looks suspicious and it's hard to track, especially if it's those online transfer from checking. Oh, you guys couldn't imagine how many times I've seen these, and I have business owners who I've had to shut down. Unfortunately, I don't want to be that guy, let alone having to do it over a call. I don't want to meet with somebody who's already hard-headed, and I'm already having to match a hard-headed service, or I'm like, I don't want to have to show them this, but, and I've told people that sometimes when I'm over a call, it's like, I want them to know ahead of time if they don't. Like, hey, I'm an introvert. I don't say that normally, but I just want you to know I did it this way because I'm a very cerebral person. I'm unlike any other broker you're going to come across. And that's a great thing. You want to deal with somebody who is like that, somebody who's not going to chirp in your ears, who doesn't know what they're saying or how to say it is what's most important. And I've already gathered these from running my other businesses. And so who else to hear from somebody who speaks slowly? I'm like an old man at my age. A lot of people will tell you that. My younger brother, my family. Man, Michael, you're like 80. Like I walk around like I'm 80 sometimes. And I'm in, I work on my posture. I don't have the best genetics. I was an athlete at some point. I was a Division I soccer player, but those things change and you grow older and you do other things. And you test yourself even more cerebrally and mentally. And I did a lot of that. And so I do speak rather slow because I want you to grasp. I don't want you to miss. And when I pause, people go, "Are you still there?" Or you, I'm just listening. I'm observing, 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 and absorbing. Put those two words together there. Didn't mean to. But I'm just listening very closely. I don't talk over you. I take the time, and that's a refreshing feeling. And you go, man, I wish if I would have had somebody like you in the beginning, because I'm not like everybody else in this industry. And it's not even my personality that meets this industry, but I do it so well. I know my stuff, and I know what all these products and services are. And I've been there where you guys are trying to seek that financing, trying to look for a credit partner if need be, and doing all these other things to try to get to where you need to get to your ultimate outcomes. And I'm here to help you with a lot of that. So we're going to try to end this soon. I know we're 30 minutes in. I tried to say I'm going to do this earlier, probably 45 minutes and less. Please hang in there, guys, with me. A lot of great material. I'll try to leave this doc down below. If not, or fill out the questionnaire. Online transfer checking from, but I've had to shut down business owners who are doing like $2 million a month, literally. I didn't say $2 million a year, but yes, $2 million a month. Who have these suspicious online transfers. And it looks like you're manipulating bank statements, especially if it's going in and out, or if it's from like a vendor or supplier that we can't just easily track, not easily verifiable, or hey, that's just too high of amount of money coming in at once, and you're in this industry already. What if that sale never was created? What if you in that customer or that client, and you never developed and you never generated that sale? Or how long did it already take you for then of initial contact to then generate that? And so there's a lot of little stipulations that we know in each and every industry, and the lenders do, and we look at it very carefully, guys. It comes from like a vendor similar in other ways, another person selling you, that can even be somewhat complicated. And there are other instances where you don't have the right processor. So if you guys are looking to have the right processor for credit and even debit cards and even save money on, I'll try to leave more information on payment processing and what I would recommend on depending on where you are in your business and things we can work on. And then the point of a lot of that is to save you more money in fees and processing and what you can do to collect money from your clients, and more technology based and getting with the times, so to speak. And if you've been doing something for so long, and whether it works or not, you have to see what's actually out there in the market. And you got to ask more about what your competitors are doing. It's not just about what you are doing. You have to know what the market is doing. And if there's a way for you to generate more sales by increasing volume of clients, by increasing volume of those products, increasing more time on creating a product, or if you don't need to do that and you scale back to focus on one because that's what's generating you amount of revenue, and you need to scale that one up before you move into all these other services. Or what else do you do with your marketing? Is it your advertising? There are different things we have to pull the levers on, and it has to make sense. And it's wouldn't be counted as true deposits and be stated revenue. If you have multiple business checking account transfers, then we will look through them all. But also make sure you apply with your highest revenue one. And more so the wire electronic transfers, a lot of the times that can be more accepting. We still have to see how those are being developed and where they're coming from, because sometimes they're not what we're looking for, especially if there's like a loan that's being wired into your account that's not an actual revenue, that's a loan, or here's another mortgage, or here's a payment on this. Like that's not an actual revenue stated, or in how you were depositing it doesn't come out to be as stated revenue. And in a few other ways. If you have bank statements with different banks, then we will need to look at the last 3 months for each bank, depending on when you switched. Of course, that is because I have a lot of clients who are like, I just recently changed this account or to this banking account, and now I didn't get my bank statements from that account. So when I submitted the application, now can I restart? Yeah, we can still look at it, but we just have to have that 1 month of bank statements. There's 2, those 3, or however much, one of those or more submitted from that banking institution. And if you have multiple banks and you've been established for enough time with them, then and where you're depositing here and there, money's probably being moved and wired and stuff like that, then we need to make sure by checking those accounts. So if you have those, then we'll have to look at them. If one, great. And I always tell people deposit directly into one account if you can. I know people have different business checking accounts, and the way you deposit, the way you collect money, I get it. I know how all that works. Been there, done that. And so I always tell people, though, if you have one account, that's the best thing to do. And so no more than 5 non-sufficient funds, NSFs, or negative days in any of the last 3 months. Certain lenders will look at it a little bit different, but a lot of the times that's on a basis point. That's a very lenient thing too. No more than 5. Like how many days? 20 days, working days. And what would be withdrawn and deposited, withdrawn to the lender collecting their money. Like you can only have so much. So we're being lenient, even if you don't think it is. Bounce checks, overdraws, a lot of other stuff. If you're falling behind on any current MCAs or similar for like a week or so, or it could be, like I said, a hybrid cash advance, not strictly a traditional one, you likely wouldn't qualify. It's going to be hard. Current loan consideration. If you have a current capital advance, the amount you still owe will be taken into consideration and cause a reduction in your approval amount. More funds, second to fourth positions may be available, and other lower tier services, maybe not past 2 positions, maybe a minimum of 1 to 2. If you have an existing cash advance / term loan, this is what they're being named as in this market, a lot of unsecured revenue-based financing, hybrid cash advance, hybrid advance / term loan, pretty much blend in. It will cause a reduction in what you may get. And if you had more positions, you may not get anything at all. For a lot of you out there trying to consolidate loans, I'll get into in a second. So if you had more positions, you may not get anything at all. This goes the same with all business loans, advances, etc. But if it's idle that you have only, then it's okay. Then they are not usually correlated and shouldn't cause a reduction. For those of you trying to refinance, consolidate an idle into another SBA loan and stuff, that just won't work. Current loan consideration or current loans. Part 2, the majority of lenders will not lend you another advance / MCA / term loan in this space for these types of services within 30 to 45 days. Sometimes, yes, you can get started days after, but not always. And you have to question the legitimacy of who you're going into. Oh, and what I wanted to say earlier, and I didn't say this, but I alluded to, I do normally talk less, guys. I just try to get through this information. But there are lenders and providers out there that I am not associating myself with because they are complete liars. Complete. Even a lot of brokers, agents, people have moved beyond, and people who don't know this, but a lot of them, they I don't like to use this word over or sell. I don't like to use the word sell in any kind of context or sales, even though it could be good or bad in the way you use it. I just didn't come from that background, even though I do this and I do well in it. I consider myself better at the marketing part because that's what I learned in the sales part too now, but I don't do anything unethically and I come off as authentic. So it doesn't even feel like that. And I don't do it to intention, like what the word is. I don't even think about it a lot because it's now not quote unquote exactly all automatic, but it comes a little bit more naturally now that I've been in this. And if you've been in business for long enough, you'll understand that. And if you've been working in the field in the different positions of a business, you'll even understand it better. And that's what allowed me to, in my younger 20s, when I worked in different positions, I didn't go right into the cubicle. Then I started learning. I got underneath those owners' wing, in the wings, the presidents, the CEOs, etc., co-owners. And I got into those boardrooms. I got into those rooms with systems, math. I started looking at things on the whiteboard. I started giving my input and doing a lot of things. And that's how you grow. Once they found that out in me, once they started to see that trust, more of it built up. And so here, consolidation, we can either give you a second position, et cetera, as I mentioned, and you net the difference. We pay off the first one and you net the difference. But it's harder to say if you have 4 to 5 positions and you won't get approved, or you'll get another one, but we're going to give you a lot less. Rates are not going to be as great. The terms are going to be less favorable. Of course, that's what happens. And you're trying to consolidate, but the other options don't work. You don't have enough cash flow as it is. Profitability is another thing. You're reporting a loss, even though you said there's something that came up. Yeah, but at the end of the day, you're still reporting that. And it's just too recent of something to note, and it won't work. Now, for those of you in here on the real estate investor side, I'll leave more information down below in the description. You can use some of this for working capital purposes, not for real estate investments, passive income investments, whole housing and stuff like that. But there is also traditional real estate financing, maybe an SBA commercial real estate. But for SBA 7As, real estate passive investments doesn't normally work. So we can look at another option, even creative credit-based financing. And I'm doing a lot of this with a lot of people. And so here, where you don't have to pay off your first, et cetera, not have a default with another advanced loan company. Sure, we may be able to pardon that and go, well, how long has it been? Well, what kind of payments have you been making? Are you somebody who's been making your past payments on this? How about another loan? Have you taken an installment? Have you taken this? Okay, you haven't, then it's going to be harder to. But regardless of it and how long ago, you usually don't get any more funding in this industry with the default. There's like 1 to 2 or so lenders that I'm associated with and the best of the best on this, and there could be more. But you'll start off with a lot less if you get anything at all. I've had a lot of these people come back to me and go, well, I'm trying to get an advance, and I'm more than happy to get to help you. And I care about you as a person. Like, I got to take the time to know you as a person, as a human, in whatever communication channel that is. But normally they won't give you any funding. And you have to start somewhere, and it's not going to be favorable. Pay us back in 30 days, you're going to have a huge repayment. And if you don't pay us back, you don't prove us, then toast a lot of the times. 30, 60 days or however much it is. Well, can you pay us back in a short amount of time with an extra added interest, even though these are not interest rated products, with extra added on top of that? Can you make that? That's all they want to know. Two things. Can you pay them back? Two, what happens if you don't pay them back? Like they care a little bit less about like everything else. Sometimes they care more about, okay, yeah, depending on the service that we go into. And I care a lot about what you use your funds for, the plan on how you use all this. All of this does factor into getting the right financing. So this year, there can be a default with the past default judgment in place. That doesn't make it any better. You default on a lump sum, no lender will typically lend you lines of credit. That should be fair enough. Background checks. If your background report comes back with a criminal record or past financial issues and past UCC filings too, nothing that's been taken care of, then it can be an automatic decline. But we can be reasonable if it was in the past and you've changed your ways. So no collateral with this. No, hey, you got to hand up liquidity. You got to take out equity out of collateral. You got to do something where you give the lender or mortgage company the title for you then to be able to get funding. And then when you get the title back, you have to pay them back first in full and everything you need to do to accomplish that. Other things like commercial real estate and or developable land. But those are other options, especially if you're trying to get more and you can qualify for them and it makes sense to. There's a lot of things you have to look through. But if you've changed your ways, we can be reasonable here with the background checks. Not used for real estate investments like fix and flips, rentals, etc., passive income investments. Use the personal/business/startup funding option for that, and the credit line hybrid, and that's in infusion with one of the personal/credit-based options where we can do unsecured personal and unsecured business financing, and or traditional real estate financing, private lenders with my real estate specific form. I do a lot of this too, ground up construction projects and more, and the list goes on and on. Also, not have issues with financial fraud, standard. A lot of people in the past. I haven't had one recently, but I get to know who those people are. And I'm not confrontational. Like I can give you the chance, or I might not even email you or connect with you after what happened and you know why you were declined. I might give you just a quick, hey, you were declined. And I can't explain why. The lenders won't allow me to. The underwriters will tell me because I have those personal business relationships. Hey, don't explain that with them. It's just sensitive information and that could get you in trouble, or that can get the lenders and underwriters in trouble. That's just something that I have to give you at a brief overview. You know what you've done. In case you haven't, you got to check in with those. But pretty standard financial fraud, past default and past default judgment in place, submitted altered bank statements to another lender, not good at all. And I've seen those cases come up more now than ever because a lot of you are disqualified for revenue base. It's a hard time right now. The dollar, look at the dollar, is not even going far anymore. What's happening with banks and credit unions? And then credit unions taking over a lot of things, entities and other things that are changing. And even though there's a credit union and there's a place to have your money in that could be better than other ones because of what's happening and people deducting money out of your accounts without you knowing, or things that are being converted into accessible assets that you didn't want it to be, or there's so much. But a credit union and you're trying to get funding through them on that level, I'm not saying it won't be hard. It's just, it might not be what you want to do. And it's not going to allow you to free up more of what you want to get. So I wouldn't rely 100% on just credit unions and funding. It might be just your last resort. And if so, okay. Or it might be in addition to, it might be a good place to start. But there are other financing institutions and lenders like those that I'm showing you here that can be most appropriate. And additional concerns for denial, look at this month's current revenue corresponding to the month you are applying to make sure you have enough revenue and deposits, and that the month to day revenue is enough so you can support the loan payments. It depends on the time of the month you apply. It's best to apply earlier in the month if you know you'll be depositing less and having less revenue half in the month or so. But for a lot of you, that probably doesn't even make sense because you already are generating, your first week, you're like, I just put in $69,000 in deposits, $79,000. Okay, great. But for somebody who has low revenue compared to what their last month's, you just got to look and you got to know your patterns, whether it's cash flow, profitability. You got to look back at your business and see what kind of pattern recognition is there. And if not, and you're just getting started, what is this market speaking to? Have you been underneath somebody's wing to show you enough of it? And if you haven't, and you're just kind of going blindly at it, just trying to work through everything, and you don't understand the numbers to it, it's going to make it hard for you. You're going to be done before you even got your first $20,000 a month or 30,000 or however much your goals are or wherever you want to get to. But you got to understand that you need to keep putting back more money into your business, recirculating that cash flow as well, saving more cash flow, having more cash flow on hand. Uh, there's so much to this. I'm not going to get into all the cash flow aspects. I said I wouldn't, and all the things you can do to improve it, as well as profitability. But that's for another time. It depends on the time that the month that you apply, et cetera. It depends on the client. Unfortunately, with the month-to-date revenue, half the month was gone to low to fund. So if you're applying halfway into the month and you've deposited less revenue as opposed to the other ones, well, we can cut back half of that offer, if not a lot less, or we don't give you anything. It's too low. Plus, you already have non-sufficient funds. You're overdrawing. You can't make your current payments to the other providers. You're bouncing checks. Like, how are you supposed to get money for something you can't check in? And so there's a lot of stuff that can be a reason you get declined. Another thing is if you're applying in the current month, and when we go to the bank verification, the decision logic, which is very standard to deposit, ACH withdraw, ACH with transfer, deposit, ACH withdraw. There's wire transfers and other ways for other tiers, etc., for higher funding clients. To issue your funds, ACH usually, wire, etc., to deposit and withdraw to pay the lender back for fund underwriting, and to see too many negative days and you're minusing your account, and it's bad. Like, okay, and more things like these, this can cause us to decline your file, anybody else's, and or lower the amount. But it takes a lot of this is going to result in a decline. Just keep that in mind. If we have a reduced offer, can you still put that to use? I never pressure you. See, like I said, run my businesses, and this is why I bring it up, because I want you to understand that I'm coming from a place too where I get you. I know how hard it is to not generate your first dollar when you wanted and you expected it to. When I had a certain product or a business in the affiliate health space, I didn't generate my first amount until about 11 months in, literally 8 to 11 months in. And it was about 18 or so cents. I think it was 18 cents, on a pain relief cream from Amazon. Until then, I started then to grow more. I figured it out. I iterated. I started generating more per month, and then grew and grew and grew from there. And so it's just about understanding what you need to apply, what you need to withdraw from. What are you an asset or are you a liability to what you're doing? There you see application. I'll try to leave that link down below, but I'll walk you through where to click. And this is a more standard. So when you fill out the questionnaire, I'll be able to get it more into detail on where you should go into the app sequence. But I'll break it down right here. When you click here, here's how I'll navigate you. Click here, depending on the service, depending on the provider. And there's a way to do this where it could be more directly or it could be indirectly. There's direct lenders that I have relationships to galore. And then there are the indirect lenders where we're housing them underneath a brokerage setup. It's more flexible. It can result in maximum approvals with myself and my team helping and reviewing and looking at all these things and making sure you get the best lender, where there's 2 to 3 in your industry, but we wanted this one saw, or hey, we wanted to go with this one originally. This one saw, try to come in. No, this one's going to get more. This one wants to earn your business. This is what's best suited for you. You're not falling into mistakes. And this is the best association you can go under right now in the market, like it is today. And not every one of these is created equal. I work with, if not the very best out there. And so we do it very well. Usually we have this beat, or I think it's meet or beat, like $500 gift card guarantee. And that might change over time. But if we're not able to beat your current offer, let's say you have a contract set in place with one or multiple providers that hasn't been signed and dated, because once that happens, it's done. We can't do anything. You've accepted to everything. We could look at it and go, well, do you have any proof of that offer is better or it's less and we did better in some cases? But can you prove to us by that, when we can visually see, if need be, usually we will want to, but if we're able to get you more, great, then that $500 gift card doesn't work. And so that's how we do things. And we're able to beat a lot of offers that are out there. I was just thinking of one thing. Let me open up the screen here. I want to make sure you guys have additional information on this. So I'm flipping through on where you guys would come into. So yeah, it's pretty much there. We haven't changed anything. But the meet or beat guarantee, where you can potentially get $500 if we cannot meet or beat your best funding offer. And there's evidence of that, of course. So I won't go through all the steps on a lot of this, as well as the step-by-step process of the application, which we're looking at on this document. But just know it's there, and I can provide you with more information in time. Our amounts here, we can go up to our 2 million, sometimes you see 5 million, but it doesn't mean you're going to get that exactly. 3 months of bank statements, 4 months in California, potentially Utah and other states, as that's being expanded now. So I'll say, hey, if you're in this state, then submit the 3 months of bank statements, avoid a check, copy of your driver's license, and then send this last amount of bank statements, full bank statements, to this email address. However, it needs to be sent in myself and or my team. Sometimes I can't see it because in certain states we can't, because of new disclosure laws, of course. And we can also, in certain states, communicate the exact offer of the terms and the rates, the final offer. In certain states we can, in other ones we can't. Take that kind of an approach depending on how you're set up, as well as in your business, as well as set up on the other side, on our side. But it's more of an in-house look we can take at, and we can get those there and see those on the back end. But this, a lot of the times, we'll be asking for it in the very beginning. You'll probably see that sometimes they ask for that at the end, but it's better to have it all ready. We really need the months of bank statements, have all of this set up, ready to go, so that we can already go from next step to next step without any friction, without any resistance, energy, and time saved. Note how you'll be able to safely and securely upload your documents, and it's very safe and secure, guys. You can always save the application, but I would at least say complete and sign. And if you didn't submit everything, come back to it right away, but have everything ready. So you don't have to go, oh, well, now I got to go submit this. And see how, if you're not ready to do it, but you're okay with that and you can live with that, and you can come back without feeling like, oh, I got to do this again, then okay. But just understand it's better to have everything ready. How it works, you can normally get between 75 to 200% in approvals for these. If you're doing 5,000 on your lowest month, 3,000 and above, then it's about 20 to 25%, but not exceeding 5,000 in maximum funding. But if you're doing 5,000 on your lowest, 15,000 and above, obviously is going to approve you for more funding. But we have to look at more of what you're depositing and everything else included, that you're not over leveraged. So I kind of gave you guys some examples to look at there, or one example. Say I can always give you more of these. I had other video content where I've explained other examples, but here you can read through this. You can understand why this would and wouldn't work, what you would expect if you needed more of a term. Could that even be plausible or feasible? In your situation, it may not be, without business credits or without other factors. You don't have the sufficient collateral coverage, or your online bank term loan, not enough cash flow. You already are drowning in enough debt, or other things we look at, and it's too thin of a file where the lender would need to place a UCC lien on this, and they would actually need to do a blanket lien, or they need to take this on your business assets to make sure that they can complete this. And if not, they won't always ask for that, but for a majority of the times, they will likely, if they need to get something done. And so paying unwanted and necessary interest, if you have longer terms, you have to also know about that, unless it makes sense to do it and it's a longer term, etc., with better rates. And what you're trying to do, your use of funds. So your payback amount, I give you guys examples here. The rates, I give you guys an example there. If you're AB paper, and this example, this might be an AB paper, and another one, it might be C to D or so. And I understand this very well just by looking at this, and I don't have to have the documents ready in the beginning. I don't have to look at a credit report in the beginning to do a pre-underwritten file of this. Now, when I have that stuff, of course, when we get that stuff, of course, it's going to change things in underwriting. But more or less, I know how to give you guys a closer enough of a ballpark estimate about what to expect, depending on what you've submitted on that questionnaire as well. And I'll show you a few other things. So factor rates, we see here, total payback. To get rates of this, you need 700 plus of a credit score in revenue. And if you're below 675, it's usually 7 to 11 months. And that's standard of what you're going to see with everything else out there. And if it were to change, you'll know about it. But there's some instances where we can make an adjustment and give you guys some wiggle room if we best see fit, and if the lender best see fits and they're trustworthy of you. But those are usually the best, and this is very, very good for what you're going to see in the market. And again, if anything changes, you'll be made well aware of this. And again, this is stuff that you guys normally will not get on the back end with somebody else, and what you're seeing, and things change. And when you're working with me, believe me, I'll be able to help you very well. And so what would you get if you had 4 to 6 months? Why would you get that? I can structure it different depending on your file. It's a soft pull. We still have to look at things. You have to start somewhere, move up, so we can increase the terms, decrease the rates, and get you more funding. And remember, with me, you're working with the best lenders and network in the space, underwriters, etc. If your benefit exceeds your repayment, then it makes sense. But when it doesn't, that's another time and another matter that we might have to work on, work around, or just work through it and see what we can do. I'm not going to put you in a position that doesn't make sense. But for example, and I give you guys that, you get 250,000 to start, depending on the file, at a 1.35 rate, and we see standards between a 1.35 to about a 1.49, if not a little bit more. That's just the standard rate. And that's because it's too high of a risk. And if you are an A-tier client, you could get between that 1.19 to about a 1.3, more or less than even a 1.19 in some cases, not always. But a 1.2, that's like exceptional. 1.21, 1.23, 22, that's exceptional, phenomenal. And then if you can get that in a market like today, and if you can't, okay. But you got to build up to decrease your rates and to get better funding amounts as well if you didn't get it all at once. And then here, and the other thing too is you can get this even faster as opposed to some of the other ones where there might be a wait period of 6 months, or if you have another one and you add this in the meantime, can we add that? We can look at it and go, yeah, you have an online bank term loan on top of this. What's your debt to income, or how much are you over leveraged or you're not? Boom, we can do a lot of stuff. But for this example, they're paying back $938 daily. Now they have the option likely to do daily or weekly. Monthly causes too many defaults. Yes, there are the online bank term loans, SBA loans, even business lines of credit right now are like weekly, even daily approvals. Monthly is just too hard for a lot of people. Even bank loans are hard to approve of for lines of credit, any kind of bank term loans. These are online bank term loans that I have though with less underwriting and more flexibility, and it can be funded faster within 2 weeks. This one can be funded faster within 1 to 2 days, sometimes instant same day, but don't always expect that. If not, an additional 1 to 2 days, so up to 5 days more or less, depending on the file. So they're expected to pay back $4,690. The math is right. I just want to make sure I verified this, and I did it in the past, but here it is. And we do take off weekends. And so the expected monthly from that in those 4 weeks, more or less, it's $18,760. Biweekly, $9,380. Now, you're asking who in the heck is going to be able to afford paying $18,760? Not the right question. And so when we are not in business enough to understand our own numbers, or we do, but we just don't understand how financing works, and we look at an arbitrary number, is that obsolete? Do we look at that number and go, man, that is too much? See, it's all about perspective. It is too much for you. That's not a lot. Great. It's not for you. That is too much. It is for you. So it just depends on perspective. It depends on finances. It depends on where you currently are and where you're trying to get to. And if you have enough pattern recognition and you have to start here, is this your only option? And even if it isn't, this could be your best option to begin with anyways, and start recirculating and getting more money. After this project, I'm going to have this one, or I'm going to need it for inventory, replenish my shelves. I can't do creative credit-based financing, SBA financing. I need new product, new inventory. I have new suppliers, new vendors. I just got the old stuff off the shelf. This new inventory, I've been testing with it over the last 2 months. My ROI, gross profit margin, about 10 to 12%, 20%. Oh my. So you're taking 20% now and you're growing it into 34. You're going to add more inventory now because of what you just. So you're going to take 100,000 and you're going to be paying back 130,000 or 127,000, whatever that is. But you're making how much? An additional $300,000 in revenue. Why are you, if you're not complaining, but why are you complaining? So I just don't want those higher rate. Yeah, I get it. Nobody does. I don't have to get them anymore myself. I've been there, but I rely on other things. But if you have to, and that's what you best see fit, or if that's the option, you haven't fixed the credit, you haven't fixed the business credit, you haven't even worked on business credit, you haven't even worked on improving cash flow, you haven't even worked on profitability yet, or these are just things that you don't know about, or you just don't know how to go about it, or you're just not listening. You're just listening to yourself. See, I don't just listen to myself. I listen to you. See, there's a big difference between you and I. Or maybe there isn't. Like I've spoken to many of you, go, they have similar characteristics. They have similar values, aspirations, beliefs. I know like that because I'm observant. I don't have to say much. See, I show it with my actions. Us, we show it with our actions more than we speak. If you were my broker, if you were the person I was turning into, just email me. I have enough confidence in you. I don't have to have a phone call with you. If I know enough, if you've been seeing me like this from time to time, I don't always have to get on phone calls with people. Do a lot of things via email, text message, follow up, send you that email PDF or email questionnaire response like this. Can you please check your email inbox with the subject line, boom, boom, boom. Everything will be detailed in there. Have questions, send me a quick email, text message, and or if it takes a phone call at that point, at least you know what's there. Hey, Michael, I just had a question on option 1, option 2. Is it really like, okay, what's the success fee? Okay, I saw that, but is it going to be, okay, good. If I didn't explain that there, that's another thing. But if it is already explained, you just needed more clarity, and a lot of it's already explained there. See, at that point, and that's what I would love to have. See, I'm not already a traditional man. Are you a traditional man? Are you a traditional woman? And so already doing a lot of online stuff digitally, I get it. There's a time and a place for that. And it's a lot of times in a place for physical stuff to do and all this. I get it. If that's how you've been programmed all this time, but we're in a different age. We're in the digital age now. And so I have to look at the two and go, is it energy and time efficient? It has to make sense at that point. Otherwise, I'd be on calls all day. Not my personality, as you guys can tell. Don't speak more. I listen more just because I'm trying to get through this material. But it has to make sense for me to do that. Not because I don't doesn't mean it won't make sense. You just got to change your way of thinking, your perception. So I break it down. So somebody could have had like 6,000, depending on the numbers we change, depending on the file. It's not set in stone, just so you know. This is an example, and it can give you more of a ballpark estimate and a range and what to expect. Okay, that's not what I liked. So what do? You start off with less or more? Overall total cost of financing, and then I can put the cost of funds there, what it would be amounted to if you were to take, let's say, that 250,000, and that were to make sense. So I'm just doing some quick numbers here. By subtraction, that would be 87,680 on those cost of funds, and we could kind of mathematically do it in a different way too. But no prepayment penalties, and we usually have the best early payment discounts. Make sure your benefit of using the funds exceeds your repayment, otherwise you will never justify it. If you're doubling, tripling, quadrupling your revenue, you have a contract, equipment, boom, 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 inventory example. You're in a tight pinch. I can't wait 6 months, boom, boom, boom. What will it do to your business? Just imagine that. Will it be able to allow you to free up time? Instead of working in it all the time, you can look at it from the outside in. Take a vacation, finally, kick your feet up into the sand while you look out into the sunset. It's so calm. The waves are calm. People are around you, or they're not people. It's just you. And you're just so focused on that moment. You know, once you get up, you can go back into your hotel room or wherever it is, your Airbnb, and feel relaxed. Have fun with the kids. Watch a movie with them. Feel more content. Instead of feeling like this is all stressful and overwhelming. And no, there's still things that will come up that will allow you to feel or make you feel that way in your business. But how do you reduce and limit that exposure for how much time when you do that? These are the things you have to question and have eventually, not now, answers to. So an example for 15 months. So you see that there? Less of a term, higher monthly repayment. Now, if they were to get 24 months, we could chop it up and say, hey, it'll be less of a monthly repayment. I can go on and on about these examples. For your case, I'll make more of if you fill out that questionnaire as well. More or less, okay? It's more or less. Payoff discounts explained, best of the best. I won't get into all of that for the sake of time, but you can see that there on what lenders would usually give out. And sometimes we can give a little bit more if we could, depending on the buy, sell rate, and a lot of these things. It has to make sense, but usually it comes with the best early payment discounts and more. Other options, if those are ones that you would qualify for, sometimes we'll tell you not to look at this, but we have a little bit of a little look at a different lender and what they would associate and what they would try to underwrite. And more, here they are. Just some more examples on a 150,000 at 18 months with a 1.23 rate and what they were taking. I've done a lot of this. If you don't get over 150,000, you can pretty much not have to supply business tax return, year-to-date financials, profit and loss, and a recent AR report, and some other things perhaps. So if you just want to submit the minimum of like 3 months, copy your driver's license and avoid a check, you might just be able to do that just at the 150,000 threshold. So it just depends on what you're trying to do. You can come back and get more in time, how much you decide you're going to pay this off fast enough, another position in time after a certain amount of time. That's up for you to decide at that point. Or you can have the line of credit option. We can try to do a lump sum with the line of credit. If you can, lines of credit are hard to get approved for, 500,000 in annual gross revenue usually and above, or 400,000. They want to see at least 50,000 on monthly, the lowest monthly revenue, and the numbers come out to be a little bit different when you do the math on that over a year. But 700 plus credits, sometimes a little bit less, 680, but 700 plus, 725 plus, even more time in business, better credit and everything else. So there's so much they're looking at. And you'll get a lot less with a line of credit in this market. It's not collateralized in most cases. Terms, what they're usually dependent on. I give you guys the underwriting guidelines there. Application, again, just to reroute or come back to. Debt restructuring option in case you needed to do that. Self-employed option. We can even refinance this debt here underneath an online bank term loan, SBA loan, even sometimes use a personal loan to kind of clear up some debts. Some quick pro tips here. If you have existing credit cards, put it on a personal loan. It's an installment. It's not a revolving account. And so you can pretty much assure that that'll be transferred over, clear that up, consolidate that, refinance that, whatever you're trying to do. And then later on be able to transfer that over, balance transfer or so, a swipe over to even these business credit cards at 0% if possible, but not always. And so you have to look at what kind of business financing you're going to get into at that point and determine, well, is that lender going to allow me to refinance, consolidate any kind of personal debt? SBA loan lenders, other types of lenders won't allow that. They're just going to look at any kind of business debt that's associated and then refinance, consolidate that. Now, how much we do at that point, free up cash flow and be able to then get you more debt on top of what your existing debt is and what we clear up. That's why we're professionals at this. And you don't have to worry about that. We'll go over all that. And so here, to get started, self-employed option if you're doing less, like I said, we're going to close up here soon. Online bank term loans up to $350,000 without collateral and monthly repayments with your choice of 2, 3, or 5-year repayment terms. And over here, what it takes. These are based amortized as an online bank over interest rates, you can say. So this is the part now where we're getting into more of the interest rates part of this equation. Between 30 to 350,000, your choice of 2, 3, or 5-year repayment terms. Normally, with the amount of time in business you have, say 2 years. Normally 2-year terms, 3 years, 3-year terms, 5 years, 5-year terms. Above that, probably get up most of 5 years, sometimes even a little bit more, but 5 years in a lot of cases. You get monthly repayments, no prepayment penalties, fast loan funding typically within 2 weeks, so a little bit more time than the other one. Fixed annual interest rates starting at 6.99, but with prime rates, there could be adjustment here of 8.25 plus. So I normally see between 7 to 15, if not 7 to 18%. These can even go up as high as 30%, depending on the risk association with credit and a few other things. Leniency on use of proceeds. Term loans can be supported to be used for construction, remodeling, and more. Bank term loan eligibility, 2 years time in business, be a U.S.-based business owned by a citizen or lawful permanent resident. FICO of 660 or higher. So we have to make sure this looks clean, and the lenders have their own scoring assessment. So you may be thinking you can get approved even with just that, but we have to look at the reports and everything. I've seen these things, and I know what happens. And I know when there's some things that are derogatory, charge-off accounts, undisclosed, like there's so much stuff that we also have to factor in. Have no outstanding tax liens, minimum annual revenue of $250,000. Business must not have bankruptcies and that in the last 3 years with foreclosures. No recent charge-offs or settlements. Your business must have appropriate cash flow to support the loan payments, or cash, I should say, too. Here's what the funds can be used for. I'm quickly going to run through this, what it can be used for. So just make note of that. Industries eligible, general eligibility, 2 years of business, for profit, minimum annual revenue requirements. Credit, this is where it gets a lot of people, and this is why a lot of people do get declined. Good personal credit, what it has there, FICO 660. Sometimes they might even want to say 675 for specific industries. We're going to go, we can't. You have too much debt already. Other credit cards that haven't been completely paid. Like it's too much leverage. You're over leveraged on this. Business credit score, liquid. This is what it gets a lot of people too. So let me put this in red. Business liquid credit score of 155 or greater. And this is kind of the same model that the SBA uses with E-Trans and a few other things that they look at, we look at. So if you're not monitoring your credit, and if you don't have credit, this is like you're, again, throwing a dart at the board with your eyes closed. Public record, search for business owners, no bankruptcies, like I said, foreclosures, open taxes, open or outstanding judgments. Cash flow analysis are made. So this is more of a determination on the cash flow. So this is more important than anything. Let me see this. I will. Hi, Andrea. How are you doing? I'm glad you brought that up. Let me go ahead and click the share button here on this document, and I'm going to link you guys to this. I wanted to do it earlier, but there's so much to cover. I said I was going to get out of here in 30, 20 minutes. Guys, we've been over time. I apologize, but look, you guys are getting a lot of great information. Come back and replay it. Please don't make excuses. You guys have time. You guys got to make the time to do it. You do have it. Now here, if it were important enough to you, again, you would do it. So there, the link has been shared in the comments. There it is, as you can see. I'm not sure if you guys are able to click that. I'll try to leave this again in the description in time. But this here, cash flow, since we're not just looking at it on month-to-month bank statements, although we will look at that because of cash flow, of course, it's factored in the month-to-month bank statements. We're looking at those business and personal tax returns on a global debt service coverage, on a business and personal debt service coverage, the cash flow. Like, it's so important to understand this in your business. You don't have to necessarily, well, I would say you do. You want to know the math, of course. If you're in business, you're going to get to a point where you got to know the numbers, period. From the very beginning, do it. Don't be in this long enough to then go, well, I think that if I did, no. Based on your current cash flow, what are going to be your expected cash flow projections and assumptions? What is potentially the hypothetical max on this? Okay, well, how do you know that that'll be something that you can insure more or less, although it might not be concrete? So you think that by doing this, now you're abandoning this, it's going to help you generate more money. So you got to understand those things. And so here, we're going to look at this business debt schedule. So if you don't want to supply already all this documentation, that's another thing. And so I had said hi earlier. I think you heard me say that. I just wanted to give you a wave just to make sure you know I saw that. And so here, barriers to fund. These are some items that are going to deem, or I was going to use like a shop word, I guess, but let's just use the word deem. And this is going to be something that can potentially decline a file, like declining revenue trends and borrowing businesses or affiliates. Now, if there's decreasing revenue and we can still make an adjustment, cash flow is still there, but we also have to look at cash flow projections and potentially on what you're doing too much of that won't allow us to give you this. Unfiled tax returns, criminal records, and if it's so bad, like there's been no change on this, or it's just, if there's been a change, it's just not what they want right now. Okay. Businesses or guarantors that are mid-litigation, that's a huge cause of concern. So make sure that all this is cleared up and taken care of. Undisclosed debt, UCC liens, as well as with that, make sure all this is taken care of. Extra global debt service coverage ratio, business debt service coverage ratio above 1.15 minimum and above by business income and business debt, GDSER determined by business income and debt. There's a few more things there. We did conduct a soft poll, but you can go over this in time and when I send you more of this. What it cannot be used for. Loan proceeds cannot be used to refinance a short-term obligation created with the intent of refinancing it with then an SBA 7A loan. We calculate global cash flow for guarantors, recommend gross annual income of $250,000. A few more things. Interest rates on bank term loans can depend on loan terms and the applicant's credit and financial profile, interims and stuff like that. Conducting a soft pull at a point, then it could be a hard pull, and it happens after your application is in the funding process and match with the lender. Or if we go directly, indirectly, it's better a lot in this market to do it that way. And I already have those direct lender partnerships, like I said, but we're getting you what is the best of the best and not tripping up in other places and not doing it correctly. So here, the SBA loan option, there might be another one that I'll label up to 350K, but this is another one here for more up to 5 million, startup, non-startup, the qualifications to that. Purchasing a business, I'm going to update this one in a little bit. Hopefully here soon as I can free up time to do that. Qualifications and eligibility and more if there's other SBA loan options, but I'll tell you the first one is best or for this scenario, and that's why the questionnaire is the best place to begin with. Bolt SBA loan, up to $150,000. That's a quick injection here. This is awesome. A lot of people in my email inboxes and a lot of people that I'm helping out, past clients or people that couldn't qualify for other things, they're looking at this and now they're taking it serious. Now, time will tell who is most serious and who isn't. A lot of people are talkers, but they're not doers. Don't say something just to make it sound good to me. I don't even want to hear what you're going to do. Just do it. Does that make sense? I love hearing it. Good. If it has to be said and communicated, good. But do it. That's who I am. You don't have to worry about me. And so I'm usually asking of the other person. And so here, Bolt loan, quicker up to 150,000. New one of the new SBA loans. I'm going to leave more information too as well. Business line of credit may not work or may work, but there's some of the qualifications there. Asset-backed funding, commercial real estate owners, available land. Then you have the personal / business / startup loan for creative credit-based financing that may or may not work depending on your file, but you'll see that there. You might need to get a credit partner. There's 401k IRA financing. I'll say the first one's best, the second option's best, the third one I wouldn't recommend, etc. for certain reasons. Credit line hybrid, similar to one of the personal funding options, business funding options, I should say. Over here, more for business credit building, personal credit resources. Then you have the cash out refinance or the sell lease buyback, or however you want to see doing those. There's also ground up construction. There's more on real estate too that it's not been on this document that I can also release to you in time. Some of this I don't want to all publicly release, as some of the lenders would want that. And so this is why you get a lot of great stuff from me. You're like, oh, I didn't even know that if I had 12 properties and over the last 3 years, or if I didn't have that amount and at this credit level, then you would be deemed ineligible, or this would happen if you were looking at this amount of a property at this location. Like you don't, oh, okay, so that's what it looks like now. So you want to work with somebody who is going to provide you with this. Land acquisition for residential. How about other things that are not residential, commercial? So there's a lot. There's scenarios and what could be in your best interest. Traditional real estate financing. There are other options as I labeled here. It's not all in this document. There are more, of course, but those other ones may not be in your best interest and may not work. There's just other options. And in time, that's why the questionnaire is most important. And so the funding questionnaire, that's what I want to begin with. But there's another resource here, and I might expand on a lot of this. The 3 C's of capital: credit, cash flow, collateral, and if none, business credit. And I made a video on this. You can click the link to. And here, the business loan questionnaire, and I'm going to end the video here. So this you might have already come across. I'll try to catch up with you guys that I haven't done this yet. I've been quite flooded. People today, just nasty answers in my reel. I made a Facebook reel. Like, I'm not the problem. The problem is the person. Like, I'm at a point in my life, personally and in business, where it's like I've worked on myself hard enough that those things don't really get to me ever. And I'm like, that's not a character flaw of mine. That's something that usually the other person is dealing with. But I get it. If you're stressed out, I try to respond back. Like, you didn't hear back from me the same day. You're just upset, or 2 days. I can understand a little bit more, but just understand that it happens, and I'll try to get back to you as fast as I can. And I told people, put yourself in my shoes, please. I don't say that to sound mean. I'm not like that. Just put yourself in my shoes. If you were getting thousands upon thousands of comments a day, getting into their email inbox, getting into their messenger account, this is what I expect. You got to meet me 80-20, 90-10, 100% here. It's not 50-50 in a lot of cases. In this world, that's okay. That's not, no, that's not what this is. And so you have to be understanding of that. And if you want the very best, you want to seek out the best who can help you with this, it's worth the patience. It's worth that feedback. You're going to look at that email, or you're going to look at that response and go, in your own head, you don't even have to tell me. I'm so appreciative of you and those of you who do, and I don't have to hear that. And I truly am. I truly, really am. And it's just, say it to yourself. Like, wow. Done. Telling me that these are the details and the documents. How do I need to submit them? Application link is okay. You guided me through the application link right there. Click the link. It's that simple, Michael. If people have even come up to me, Michael, if somebody doesn't even understand the way you present the information to them, it's not about what the information is. That's one part. But if you're reading between the lines and listening and observing, it's how it's said, it's how it's presented, it's how it's packaged. And so if you could get that at any point, that's how you need to look at your own business. It's not all about always what you say, but it's how you deliver on it. Somebody can have the same product as you. You may be differentiated in certain ways and features and benefits. Okay, blah, blah, blah. What's your unique selling proposition? Why this product over that product? What is the market fit now? And as well, what would it look like in the future? Can you iterate this? Can you make it, improve it, make it better? There's so many questions I can go on and on with. And so you have to look at it and go, the difference of that was the why in the business, but more so the why of the person. That's what I gravitate to, the why of the person, the why in Andrea, the why in Jacob, the why in Marie. the Y in John, the Y in Sally. I'm interviewing you. If I had to interview you, you came in for a job, you're talking to the CEO, an entrepreneur, business owner, guess what the entrepreneur is going to ask? They're going to ask questions that revolve around, can you not automatically or systematically exactly, but can you fit into the mold of the culture, the ecosystem, Googles of the world, the Apples of the world, who they are bringing in to interviews, who are they bringing in for them to take the job of that role. And then they're also seeing more on how they fit in with the team of people. So individually, how are they? Do they meet our characteristics on what we want in a person? So I'm constantly asking these things of yourself. And so if there's a flaw there, that's not going to necessarily be like, I don't want to work with them, but we leave that out the door. It is, Andrea. I get it. But people need to open up a little bit more that are just business oriented. That's another way to put it. Because just being business oriented, you may or may not see everything else. And so there's more that you need to develop, things that transfer here on the personal side to your business that carry in your characteristics. There's a lot more that's involved. And I had to understand this concept, guys. I didn't just was born with it. I actually had to learn this over time in my businesses. And so adapting is most important with everything. And I appreciate you too. Thank you, Andrea. Appreciate you sincerely. I do. So I'm going to close up. Give me the next couple of minutes. But this is the questionnaire. It could look like this more or less. Just put a handful of results here. I could put more, but how it works. Select from one of the two options. Get a free 6-step pre-approval lending checklist. It may or may not be there in time that it looks like this. Maybe it's changed, but I'm a non-startup, so I'm going to select this. And this is so I can communicate with you correctly. Get the funding your business needs fast. Please read this. I won't go through it right now because of time and energy. Just read it. You don't want to go and do this. Just put my name. You can come back to it and read it, but read it in the beginning. There's a reason why this is there. I could even just put step 1 if I needed to, but it's just like it's there. Just read it. Do I really need to make it in bigger, bold font? I don't think so. I was thinking about that the other day because some of you who question and go, well, are you going to give me a call or a direct call? Or some people don't even put their phone numbers and they expect a direct answer. And I go, you didn't even send me a phone number. Is there a number you'd like for me to contact you in? If so, or like that's already a lot for an introvert to do, and I can do well on a call, but it's not always going to be the first step. So like I say in these questionnaires, and you'll probably see a thank you page video like I have already made that goes into and says, hey, maybe there's an expected time for you to receive an email questionnaire response back. Here's the video. Watch that first. Understand the process of how I do things. And so what I'm doing is I'm pre-underwriting these files based upon what you answer, and I do it exceptionally well. And I don't say that to sound cocky. I'm not like that. Confident in what I do. I'm very certain. And so I'm going to reply back. I'm going to customize and personalize this email or this PDF together for you too, and show you, okay, this is what it would look like. With this scenario, you can't qualify for that, but I'm going to show you what you can and can't qualify for. Wouldn't you want to know that? Holy crap, I don't care if it's 100 pages, 90 pages, 95 pages, 80, 50 pages, 60 pages. Doesn't mean you have to look through it all, and I'll tell you not to look through it all. Those are just added options that won't work or are not best, but you know they're there. Just don't do them. Don't go and apply to them. So Michael did it. Like he showed me the first, second option, third, 3 options underneath no interest rate products, but the first one is best. 3 underneath the SBA loan or however much lines of credit, but the first one is best because of your situation. Damn. So now I know where to go and apply. Now I know what I got to look at. When you learn this, when you are cerebral, when you learn, not just doesn't mean you have to be cerebral, but when you grasp the concept of energy and time efficiency, when you grasp the fact that a lot of people in this space already looking for financing are very unappreciative and are very stubborn. Like there are a lot of hard-headed people, guys, that I've dodged bullets on, as in good thing I never got on a call with them. Or it's this whole like they weren't that way, but then they turned out to be a person of you can't trust. There's a lot of people like that. And it's foolish of people to be like that. And it's so sad that we're living in a place right now where it's like a lot of that. And I get it. There's just some disconnection, and maybe it isn't me. Usually it isn't. And I'm trying to question of what that could be. It could be things that they're getting in their own way. They are sabotaging themselves. For what? And so you got to understand that. When I was in sports, I played Division One soccer, but before that, I almost felt like I was sabotaging myself. My coach, who's one of my greatest people right now, Michael, are you sabotaging yourself? Like in high school, like I wasn't genetically built. I have had the heart, I had the skill sets and everything. I was doing well, but there were things that I was like, I could have been a little bit better at this or a little bit better at this in this class. And I know I was better. I just took a little step back. Michael, what are you doing? Like it's the mindset. It's this whole part. That's what's getting in your way, guys. That's all it is. I've guarded this for such a long time, and I know who to let in and who not to let in. I'm very observant. Like when you see me in person, I don't talk like this as much. I try to talk a lot slower, and I'm observant. I don't have to say a lot. I do a lot more. And just because I didn't say something doesn't mean I don't understand it. I probably understand things much more than most people do on a term of like trying to grasp that concept. Got it. Thanks. Understood. If you get that response from me, nothing more, then don't expect it to be like he doesn't know, or some things I won't, and I'll clarify. I'll ask questions of, and okay, well, other things I go, say no more. Took care of it. Done. Like with one of my lenders today, I was looking at information he was going over with me. I'm already looking at it. So on this, I'm like, okay. Okay, guys, that'll complete everything in this video. I know we went on for quite a bit. The replay will be up. I'll have more information in the description, the questionnaire like you see on screen here, and more stuff as well. Let me close this. Email address, but the questionnaire is the best place to begin with. Quite tired now. I'm going to take a break, relax, come back, email responses, questionnaire responses. Got a few pages in the month to go back into, previous months as well. This is a good indication, guys. I care about you. I really do, as a person and as a human. Like what stands out to me from a person is not just their business, but who they are. And I look at that. And that's how you remember somebody. You remember somebody from their stories too, their impact on themselves, and something that sits with you. And something as simple as going like, well, I've been here, I've been in a divorce, and I just had to go through this court order, and I'm just contacting you from here, and I just had lunch, and I had the greatest lunch. And they go, oh man. Like that's what I then come back to and go, of course I remembered you. I can still remember you very well by your business. Normally do, a lot of clients. So where we continue off, I go, yeah, I remember you were trying to use that to buy a boat, clear off the debt on that one boat over this amount of time, freed up this cash flow. Then you have land and you want to put this amount of money. Your equipment went down, so you wanted this amount. And where are you now in position to? But a lot of you guys are pretending. Don't pretend. If you really are trying to do something and you have that in the door with me, that's what I would continue with. And I'll be here to help you. Be careful of those out there who are trying to, quote unquote, not, I always want to say steal away, but God, it's such a predatory space. Like companies out there who overshoot on an offer to then final underwriting, then telling them, no, we had to reduce your offer by like half of that. Or over here, we showed you the legitimacy of it, but no, you have an offer here. But what I told you is they will work like that. They'll probably lie to you and they'll try to do this just to earn your business. But at that point, you've gone so far with them into the process, you're just like, all right, it's so convenient. Let me just move on with this instead of looking at something else. So it's all about this and understanding what you are doing. Sounds good, Andrea. And I'll look out for things. I know you went through the document. I perhaps saw that. I saw somebody appearing in here. It says here, let me look. I think it says Anonymous Panda. It's idle. So I think you have the document open if I'm correct. Let me move my HP lighting on, but I think that does say, yeah, Anonymous Panda, and then it says idle in parentheses. But regardless of that, you can refer to that. The documentation, I'm going to leave more on the questionnaire for everybody. And that will be all for now. A lot of applicants, I have to go back on my back end, look and review things. I did a lot of that already earlier in the morning. Got quite a few more to go through. And then I will end my day here, hopefully before 4. I've been trying to take off afternoon. So if I can't get back to you today, I'll try to get back to you. If not tomorrow, if not the next remaining days. Just keep in mind that this can happen. It's okay. You're working with the best. That's what happens. And I have to do things for my health. I have to do things for my health, my relationships. And that meaning that it isn't like this is toxic. It can turn out with certain clients. And I go, dodge the bullet there. I think I did it and I handled it this way. Otherwise, this would have had to happen this way. And it's, although I love the emotional connection and that's what I care about a lot more. And in business too, of course, that has to make sense. I know that very well, very, very well. But I go, that needed to be handled this way. I'm glad I did it that way instead of that. This person needed that phone call. That person didn't need it. Or that they thought they needed, but I couldn't take the time to. 20, 30 calls a day. Just because I don't do that doesn't mean that I'm not understanding of what I'm doing and that I don't understand what you're going through. That does not mean that at all. Okay. So I do take afternoons a little bit more off just because of that, because of the sun now is here. It's whole part of the getting into summer part of it. And man, it's just like, I want to enjoy some energy and time that I can have enough of. Before, if I didn't tell you, if you guys were just peering here, I would literally, like today, I might do the same. I might just go and lay in the tub, may not lay in the tub just to calm down. I'm going to go on a jog today. Tuesdays, I normally don't jump in there. Thursdays, I'll probably just decompress by getting into the hot tub and doing, or hot bath and putting some magnesium, the magnesium salt, the Epsom salt, and I'll just decompress my mind, help my body a bit, but my mind is what's most important. So what I'm always doing, and I always tell people, my cousin told me this the other day, Michael, you're looking good. We got together. He's like, Michael, you've been like looking slimmer. And I go, yeah, well, it's because for one, I'm not eating as like breakfast, lunch, and dinner every single time. I'm like sometimes breakfast, or I'll miss out on breakfast to then have lunch. If the day before I had a heavy meal, like yesterday I had a heavy meal, I had this nice quesadilla. I didn't finish it. Might have it later if I'm gonna exercise. So I don't think I will. Trying to stay away from that. But last night we went over to my younger brother's place, and he had the NBA game on, the Lakers Nuggets. They were doing some things in their backyard with new neighbors and trying to put a fence and fix a fence and trying to come up with some things. But I had a good amount of quesadilla. I had about 2 to 3 tacos with carne asada, and then I had carnita, meat. And so I felt so guilty. My dad felt guilty too because he had exercise too earlier, he told me. And I said, I shouldn't be having this exercise in the morning. And I felt so guilty. It was good. I'm like, at the same time, I was feeling guilty because I know I can, with my proactiveness, I know I can do things well. But if it were somebody who didn't, like, it would be so much more problematic. And even if it were something that I could do, I'm always conscious of those things. I'm like, I worked hard enough to like feel good. It's not about just always slim. It's not what it is, because genetically I don't have that. But it's just about feeling good up here. And you feel extra sluggish. Like right now, I'm like sitting in here feeling like Santa Claus. Maybe not looking like it, but I feel like it right now. And that's not something that I'm like, that's not an offense, by the way, for anybody. That's not what I'm saying at all. This is just like the carbs. Exactly, Andrea. You have to be careful of good carbs, bad carbs, but it's more about when you consume them, after, before, post, pre-workout. Like, you got to understand these things. And I don't pay too much attention to like all the post, pre-workout creatine and all. No. At a time in my younger 20s, when I was more involved in sports and stuff, going into the gym, 24-hour fitness and doing things and getting fitness in and all these other things. But nowadays it's like, I know micro, macro, and if you want to lose weight, it's easier said than done, but eat less portions, spread them out over the day, and understand that if you're going to miss out and you're going to fast, you're not going to have breakfast, you're not going to have lunch or whatever you're doing. What are you having for dinner? How much calories? How much, fats, saturated fats? You have charbroiled and or blackened foods. You have these trans fats, sugars, and different oils, sugars and different fats. How you're consuming vegetable oil, different vegetables, dark vegetables. Like today, I'm going to have fruits. I'm going to have some pineapple. I'm going to have some strawberry mixed in a bowl when I go up into my room after my workouts. Usually that's what I'll do. Exercise, lay in my bed for a little bit until the next activity, next event, decompress a little bit. Privacy, that's what I need. Privacy. You guys should do more of that from your spouse, from your children, if you can. But that's what I recommend. Even if you can't find a way, from some solace. Honey, babe, I need at least 2 hours. You don't have to even tell them at a point. They're going to understand. They're going to be like, where's Jerry? Where's that? They don't even question that. They know you're in the room just laying there. And I'll lay in bed sometimes just like this. Sometimes I'll decompress by watching a couple of videos that I've saved on my YouTube or something else, or I'm messaging quickly someone, but I'm decompressing away from the business side, or my businesses, all of them. And I'm working those things, and I'm just consuming a little bit of entertainment, not too much. I'm always conscious of this. But yes, you guys got to learn a little bit more about me now. I think that's where I want to end it. There's more to me. There's a lot more depth. Appreciate you guys. Thank you for tuning in. All information will be down below in the description. And for those of you who commented, greatly appreciate it. It is more of a spontaneous live. It's not like I broadcasted this out. And if you couldn't make it, it's okay. Let me know in the comment section if you guys need any help. But the questionnaire form will be there to get started. If you guys want transparency, loyalty, I listen more than I speak. God gave me these big ears, these big eyes, big nose, not a big mouth. Think about that. Big ears, big nose, big eyes. And when I mean not a big mouth, I mean like I'm not mouthing off, or I say less, and that's so effective, and I do more. And when I have to say more, of course, I'll read the room. All right, everybody. Appreciate you all. Take care, and I'll talk to you all in the next one.